Hello dear traders, I'm Anna Kasatkina. You're watching the latest financial news on Insta TV. According to the results of Friday's meeting, the Bank of Japan decided to keep the monetary policy unchanged. The information was published today by Bloomberg. According to the regulator's statement published at the end of the meeting, the Bank of Japan remained the monetary base at the annual pace of 80 trillion yen or $640 billion. The regulator's governing board thinks that the Japanese economic slowdown, goods glut inventories and weak Chinese economic rise are the main reasons which may prevent the country from reaching the targeted inflation rate. Daiwa Institute of Research forecasts that in the third quarter, the Japanese economy contracted by 3.3% on a yearly basis. Governor of the Bank of Japan, Haruhiko Kuroda, said that the second quarter slowdown in GDP growth was a short-term phenomenon. He also confirmed the anticipation of the inflation rise by 2% in April-September 2016. In June, the country's inflation rate was at the level of 0.4% annually compared to 0.5% in May. Excluding fresh product prices, the July inflation came in at 0.1%. Before the Bank of Japan announcement, experts at Deutsche Bank noted that the regulator will not surprise markets by its decision to ease the monetary policy again. Analysts at Deutsche Bank are sure that the Bank of Japan is unlikely to take additional measures concerning this issue. Moreover, experts believe that the regulator will not reach the targeted inflation rate of 2%. According to economists' expectations, the indicator will rise to 1% year-over-year to the end of 2016. However, it can exceed the level of 1% due to the Japanese national currency weakness and muted influence from low oil prices. At the same time, the US dollar versus the Japanese yen pair is still supported by the US economic indicators and a possibility of the Fed's key interest rate hike. Thanks to that, the pair may touch new highest levels in the nearest months. The Bank of Japan policy is quite bearish for the yen. News from Australia is also very important for market participants. The Australian dollar increased by 0.2% to 0.7364 against the US dollar, and this week it will rise by 1% more. In its final report, the Reserve Bank of Australia did not exclude a possibility of the Aussie's exchange rate fall after the Fed's interest rate hike. However, it did not confirm the necessity of further national currency weakening. This was Daily Financial News on Insta TV. Thank you and goodbye.